Welcome to this United Policyholders Roadmap to Recovery, Wildfire Recovery and Insurance Orientation webinar. We're so sorry for the circumstances that brought you here with us today, but so proud and pleased to be able to provide for you some of the wisdom that we have gained over our 33 years of bringing our programming into areas that have been impacted by disasters and everyday events. And I want to tell you a little bit about our organization in case you're not familiar with us, so you know who is bringing you this information and what our credentials are, what our qualifications are. We're a nonprofit, so like the Red Cross or the Sierra Club, but we have a very specific mission. We are a trusted information resource and a respected voice for insurance consumers all across the country. We have a 33-year track record and expertise in disaster recovery, improving disaster recovery and insurance legal matters. We have been running this program for many years, the Roadmap to Recovery, and it includes post-disaster guidance and services focused on financial, insurance, real estate, and construction decision-making and emotional recovery. We're funded by donations and grants and a lot of volunteer labor. You can't hire us. Our services are free, but they're limited. We cannot be your free attorneys or your free public adjusters, but we are here really for you. We are not here for anyone but people who have bought insurance, have that safety net, and want to make sure that they get the full value of what they paid for in their time of need. Our partners include departments of insurance, people who participate in something called VOAD, which stands for Voluntary Organizations Assisting in Disaster. That's sort of the network of entities kind of like us, plus government agencies that work together to bring support to disaster impacted areas. We also have partners in the insurance sector, the legal sector, the construction sector, personal finance, people who are experts in income taxes, and the full gamut. So our Team Up, includes our professional staff. There's 3 of us here with you today, actually 4. Our government and nonprofit partners, and then our volunteers, many of whom been there, done that. Lost a home in a disaster, got some help from us, paying it forward by volunteering with us and sharing their lessons learned the hard way with people who are now walking in the shoes that they once walked in. So that's me. I have been a professional insurance consumer advocate since the 1980s. I'm an attorney. I specialize in insurance. I don't practice. I did for a while, but now for many, many years, I've been shaping and leading this program, the Roadmap to Recovery, as well as our preparedness and our advocacy work. I'm one of the authors of this little yellow book you may have seen. We're going to show you how to order one if you want, free of charge. Lots of other publications on the website. And this is my thing. This is what I do. I understand everything about insurance from the consumer side. I'm also very proud to be joined tonight by 2 of my colleagues who you can see on the screen. Annie Barber, who is our Roadmap to Recovery and Roadmap to Preparedness Program Liaison. She lost a home in the 2017 Tubbs fire in the North Bay, California. She was active in starting an organization that was very critical for her community to move forward on the road to recovery and restore not just their homes, but their community. And she is one of our lead staffers for our Survivor to Survivor program, which she will tell you about a little later. I'm also proud to be bringing the wisdom of my Deputy Executive Director, Valerie Brown, who has many, many years in disaster recovery, is considered one of the leading experts in the country on the different sources of financing that come into communities after they get hit by disasters. And she is a total pro in this subject area. We also have Amy Ludwig, who is our tech person behind the scenes. So I want to remind you all that we're just giving you general guidance. If you have a specific legal question, we recommend you consult an experienced attorney. And we don't endorse or warrant any of the sponsors on our website or the speakers, but obviously we do our best to have people involved with our organization that are experts and have integrity and are trustworthy. To download today's slide deck and follow along, this is where you go on our website. You're going to go to www.uphelp.org, and then you're going to go to events, and then you're going to go down to today's event. There you go. This is just a little bit about the program through which we're bringing you this information. It's a series of classes. This is the first one. We're just going to do this orientation to give you a really general overview of what's coming and where you are, what to expect. These are some of the topics that we cover. And this program, it's not just what we can tell you when we're talking to you on one of these webinars. It's also what you're going to find on our website. We have spent years curating information on the website so that at whatever time of day you decide you need an answer to something, you can go on our website, use the search box, go to the library that we've curated for your disaster, and see what you can find. So this is just one part of what we bring. Tonight is one piece, and then we will be doing follow-up workshops. And we don't have the Q&A open tonight, but we will be offering you opportunities to ask questions as we go through. These are the libraries. So if you're in Colorado, you see where your library is. If you're in California, for the 2024 California wildfires is your library. And this is there for you 24/7. These are from our state specific help library. So California, Colorado, you can find them through that nav bar along the top of the website. This is the yellow book. It's been around for quite a while, but a lot of people feel that it just helps them to have this book that you can carry around. You can take notes, you can use it for a memory jogger. And it's kind of timeless guidance. So if you would like a copy, email us and we'll get one in the mail to you. Those of you who are in Butte County or Tehama impacted by the park fire, both those counties have pretty robust sites up where you can get information that's specific to your recovery. Same goes for Boulder and also Larimer counties in Colorado. Ventura County offers great resources and help. At the time that we put this together, they didn't have a library specific to this summer's fires. But I do know that county has got a lot of expertise and they will be offering resources as best they can in the months and years ahead. So we want to remind you that wildfire recovery is a process and you have to take it one day at a time. Now, with this format tonight, I can't ask for a show of hands of how many of you have been there, done that. We know at least 4 families that lost a home in the park fire after having lost a home in the Camp Fire, and that's incredibly sad. It's incredibly sad no matter what your situation is. But for those of you who've been there, done that, special condolences there. So pacing yourself and not rushing is one of the most important pieces of advice we can give. It's hard to follow that advice when you're displaced and being bombarded with solicitations, rumors, offers, and decisions. But we know how disorienting this is, how hard it is for many people to get a good night's sleep. And that makes it hard for you to make good decisions. We also know it takes months for most people to regain their normal memory and critical thinking function after a traumatic event like a total wildfire loss. So we just want to give you a few points tonight to get you on the road in the best possible shape. And then we will be coming back and drilling down on some of the topics we're covering tonight. So we like to talk about insurance as a vehicle to get you back where you were before your loss, but remind you that it won't drive itself. You have to really be proactive to make sure that you are collecting everything you're entitled to, but you don't have to reinvent the wheel because lots of folks have been down that road And there's been a lot of work done in both California and Colorado to try to make your path a little easier. We always say it's very important from the get-go to get a complete and current copy of your home insurance policies. We do recommend asking for what's called a certified copy. That just means the official copy. If your adjuster says, I don't know what you're talking about, that's something where the Department of Insurance can help you. And we are going to have somebody on the program this evening. I think he will be joining us soon from the California Department of Insurance. But the bottom line is why we say certified is because then you know that that is the current complete policy that's in force on your home, that was in force at the time of the fire. So you're not getting into arguments about an outdated version. The declarations page is kind of your key, your map to what's in what you have, how much money you've got coming to you in the different buckets. And we recommend making a working copy of that policy so you can scribble on it and make notes. These are your 4 main buckets of coverage. Different insurers use different lettering often, but the most common is coverage A is what's for your dwelling. Coverage B, it would be for your garages, outbuildings, retaining walls, pools, and decks not attached to the home. Coverage C is your stuff, your personal property. Coverage D is your loss of use. Sometimes insurers call it additional living expense. Sometimes they call it temporary living expense. Sometimes they call it loss of use. State Farm has its own labels. They use B, not C for contents, etc. One more kind of word of wisdom. We recommend that you give your insurance company a chance to do the right thing, but don't be a pushover. We want you to speak up, and by that we mean keep a diary, a journal, if you think diary is like a weird word. Journal, doesn't matter. Notebook, someplace where you are keeping a running timeline, day, who said what to who, what their name is, what their phone number is, what their position is with the insurance company or the construction company they sent out, or whatever person you're talking to that is relevant to your situation, the damage, tallying it up, valuing it. We recommend that you be in the habit of confirming things in writing, which is not most people's normal way. Most people, you have a conversation, you're not sitting there taking notes. In this context, we really recommend, especially because of the sleep deprivation and the brain fog, we really recommend being very as consistent as you can in keeping this running written record of what's going on with your situation. And that means also presenting your request to your insurance company in writing and clearly. Tell them what you need, why you're entitled to it, and if they come back and say you're not entitled to that and you're not clear why, you ask them, can you please show me where it says that in my policy? We want to remind you that when it comes to insurance, ads are ads. You've got to think of your insurance claim as a business transaction and understand that the adjuster may be friendly, but they're not your friend. They're a trained negotiator, and you're really not on a level playing field in this situation. And I know that in your area, a lot of you have ended up in the FAIR plan. You have had a lot of insurance trauma over the last few years with the pricing getting dropped. So you may not really need a whole lot of schooling from us on what insurance companies really are in real life. You know, there are a lot more business entities than their ads would ever tell you. Should you expect a fight? No. Some claims go smoothly. We certainly hope yours does. But when large dollars are at stake, disputes often arise. And we know from all of our years of being in this work that being informed and empowered is the key. And that's why we're here. So I would encourage everybody just to take a deep breath. Try to relax your shoulders. Okay. I want to introduce you to Annie Barber, a voice of experience and empathy, living proof that you will get through this, a woman with years of personal and professional experience in and with wildfire impacted households and communities. So Annie, you just tell me when you want me to move the slide.
Okay. So first I'd like to start off by offering my sincere sympathy for what you all are going through. Having been there, I understand how impactful it is to your life, how stressful. All survivors have that wonderful blockage right in the middle of your chest of anxiety that is pushing you forward to make decisions and get some sort of resolution as quick as you can. What I can advise you is to slow down a little bit, take a deep breath, and make sure the decisions you make are good ones. And we have tools to help you through that. Second of all, if you have others in your community that aren't on this meeting, we are recording it. So please make sure that they see it and they connect, and that they get the help that they need. My community lost 1,400 homes, and UP came in and helped us to navigate, and it was huge. It's a great tool at no expense to help you get what you need to get on with your life, whether that's rebuilding, going someplace else, whatever that looks like. And that decision doesn't have to be made today either. Okay. So we're going to take you through a little bit of my rebuild. And, you know, the point of this is really just to offer you hope, because I know that is what's lacking, besides the feeling comfortable in wherever you're located now. But there is hope. And we rebuilt almost every single part, almost every single home in Coffee Park. And that's not the norm these days. But if you're diligent, if that's what your desire is, it's possible. So this was the very start of my rebuild. And this is when they were getting ready to, before they did the foundation. And I'm going to tell you that as people came around the corner on my block and they saw it, it gave them hope and it gave them anxiety. So everybody has a different time frame, and just recognize that. This next one is them putting in the foundation. I had no idea the day they were doing it. You tend to just gravitate back to your property where your home was. And we took a bike ride and came around the corner, and the cement truck was there and they were pouring my foundation. And quite frankly, I just started crying. It was like, okay, this is real and it's happening. Framing, it's absolutely amazing when your house starts looking like a home again. And I'm going to tell you, this is not what my house looked like to begin with. This is what was recreated. So that's another component of this. There's some good, bad, and ugly to all that. You get to choose what you want to put there. It's within your parameters. Originally, we were told that we had to get our original blueprints and that we had to rebuild exactly what we had. I didn't want a 70s track home again. I had already done that. And, you know, the open concept, the cuteness of like a craftsman style home really appealed to me. So that's where I went with it. They're starting the interior. They're working on the outside. I'm literally dragging people through my house once a week when we take a walk, so that they could see, they could have hope, I was early on, and it was a great thing to be able to share with each other. And this is the final picture of the house. Walking into it was magical. And it also was discombobulating, because this was not the house that I lost. And when you go back in, it's a little startling to realize you have to make that house your new home again. And none of us chose to lose our homes. So as much as I'm really glad I didn't rebuild exactly what I had, some of you, that may be imperative that you rebuild exactly what you had. But there are some consequences to not rebuilding exactly what you had. It took about 3 or 5 months maybe to kind of have it feel like, okay, this is home. Neighbors were the same, all of that. Sidewalks were new. We weren't tripping over lifted sidewalks. We all had front porches. So a little different.
Yeah, and we will be talking about more a little bit tonight, but also on our next webinar about this topic that Annie just touched on, is your insurer, how do you, if you don't want to replace the identical home that you had, how do you work that out? And you heard me say that there's been a lot of work done here in California to try, and also in Colorado, to try to ease the path. And by that, I mean laws that have been passed. And our organization has been a big part of a pushing for those laws, things that give you more flexibility about um, replacing your home by buying instead of rebuilding, replacing your home by rebuilding somewhere else. And one of our most important partners in bringing those laws, getting those laws on the books, has been the California Department of Insurance. And one of the real heroes, very much unsung in the background, is a gentleman named Tony Signorelli, who is with us tonight. He was not with us in the beginning, so I didn't give him a proper introduction. But Tony is with us, and you can see him on the right there of your screen, I hope. And some of these laws, like the right to use all of your dwelling benefits to replace your home as you so choose, is something that Tony and we worked on pretty hard. It was a three times back fight with insurers saying, "Oh, we're going to deduct land value because we don't want you to end up with two lots." And we would say we had lots of arguments as to why that was not a legitimate concern on their end, as long as they were paying the same amount to you that they would have paid had you rebuilt the identical home that you had, board for board, stick for stick. A lot of this requires some negotiation, and that's kind of why UP is here. We're here to give you leverage and help you be your own best advocate, but we also are realistic. An insurance claim on a total loss from a wildfire can be a full-time job. It can be very hard to manage on your own. Now, some of the other things that we have gotten past in California, like making sure that the insurance company gives you cash advances of your benefits, those have definitely sped up some people's settlements, but they also they don't change the reality that at the end of the day, it often requires quite a bit of patience on your part and tenacity to make sure that you got everything that you're entitled to. Okay, so what are some of the sources of professional help? Government agencies, construction estimators, right? If you don't want to replace the exact same home, you heard Annie say she didn't want a 70s ranch again, she wanted something craftsman. But the way you get there is by doing the calculation of what it would have cost had you replaced the one you had. That's generally what you have to do, because if you start trying to negotiate on the basis of the project you want to do, you're going to almost always run into an adjuster saying you're trying to get more out of us than you're entitled to, and it can be a very difficult dynamic. There's also professionals who, if you have a partial loss, that can help you with your indoor air quality and cleaning up smoke damage. There are public adjusters that typically charge between 7 and 15%. There are the people that they will bring in. Those are some of the folks underneath in that category. And then there's attorneys. For most of you, unless there's something funky with the title to your property, or maybe, if there was a lapse is for somehow your agent didn't put the coverage in place, then you might need an attorney, but most of you are not going to need an attorney to get your claim settled. And in fact, if you end up hiring anybody on a percentage fee and you're underinsured to begin with, which is a very common problem, paying that fee is going to really eat into what money you're going to get from your insurance company. That is not to say we discourage people from getting the help that they need when they need it. We do not. We know this fight is not for everyone, and it really does depend. A lot of it is the personality of the adjuster you get. So we don't say, you should never. We don't really give you absolutes because each person's situation is unique. So we're going to take one more deep breath here before we dive a little bit more into insurance. Oh, I didn't give you enough time to enjoy the beach before we before we looked at those numbers. Okay. All right. Not every policy looks the same, but this is generally what you're going to see on your deck page, declarations page. It's going to tell you all these details, the ones that we've got circled. The address of the property, your policy limits, your mortgage company, and then the details, right? Some of the details. So you can see there how under description, those are details. And then if you want to see the fine print that explains what those details are, you look for those codes that are on the right. So we're going to go deeper into this down the road. We don't want you to worry about it other than to tell you that your policy is your policy. Um, and your limits of liability, that's the max. But very often these numbers are not actually the max because they get modified by those details that I mentioned earlier, right? So if you have extended coverage or you have formulas within the policy that may give you more dollar amounts, that's important to know. So I'm going to stop here for 1 second and ask Tony. So your slides are down the way a little bit. First of all, welcome and thank you. So I know you have a toll-free hotline, and we're going to be showing that number. Tony, will your staff at the Department of Insurance go over somebody's policy with them and tell them how to figure out how much money they have coming to them in their policy?
Yeah, certainly if they file, a complaint online and they have those kinds of questions, trying to figure out how much coverage I have, and they send us the information, their deck page and declaration page and their policy, we can look at that and give them a, a, a good idea. I mean, there's going to be some nuance there depending on some of the facts that occurred down the road, but replace versus not replace and those sorts of things. But yeah, we certainly look at that, and we do actually, when we go to the local assistance centers in the various areas, we actually will, if they brought in their policy, go through with like a little worksheet with them and kind of show them what it generally is, and the debris removal, additional amounts, and all those little other pieces that could add up.
Thank you. And again, there are, I'm sure, most of you or many of you have encountered public adjusters that came into your area and offered to review your policy for free, and that's fine and great. That for them to share their expertise in that way. We just, always want to remind people that you paid when you bought your insurance. You already paid for both coverage and you also paid for good claim service. So your insurance company is supposed to be working with you. They're supposed to be helping you, cooperating with you, informing you. And like, as you heard Tony say, they're gonna, if you met one of his team at the LAC, at the local assistance center, then they might have already gone over your policy with you. But if you want them to go over your policy, you need to actually open up a request for assistance. It's kind of a formal process. But however you can get help understanding your policy, our website is always going to be a resource for you to figure it out. Okay, so what are some of the other buckets that matter, especially early on, right? We always tell people one of the first things to do is to try to find a comfortable living situation that's going to work for you and your family for at least a year. Annie, did you want to touch on this a little bit?
Yeah, Airbnbs, if you have a total loss, you have nothing. So Airbnbs are really ideal because they're going to supply you with the basics that get you through day to day. And otherwise, please look into your loss of use and utilize it to rent your contents. It is impossible to get a house up and running with everything you need. People in my neighborhood were using, canned tomatoes as rolling pins. It's just really difficult to have all those items that you need. Also, you're using your loss of use for that as opposed to your contents money. Most of the things that you would buy, you're going to be in a different size, different rooms. And in my neighborhood, a lot of people had those things out on the curb after they got home saying, please take this. It's in great shape. It doesn't fit in my house. So those are two things that I think are important. And also ask if your insurer gives you, your adjuster gives you a list of things for loss of use that they cover, don't think twice about asking for something that's not on the list. I moved in with my guy. We don't have fences here. And my insurance immediately paid for a electronic fence, which my dog blew through within the first 10 minutes. But it still was nice that they paid for it. So make the ask. All I can say is no.
Right. And with I I think it's interesting you're talking about Airbnb because you know we live in a dynamic time, right? Things are shifting, it used to be that insurance companies would, they'd put you in corporate housing or they'd put you in, in a hotel and that now that Airbnbs are a thing, I think that's a good option for a lot of people. Some people are now, and we're gonna get to this in a minute, um, asking for flexibility. Like, okay, I would like to take my ALE benefits and buy a tiny home or buy a nice RV and park it on my lot until I figure out what I need to do, right? So those are some of the things that are happening today. But remember, now your mortgage payments are not covered because what this category of benefits gives you is expenses you're incurring because you lost the use of your home, right? Rent for comparable housing and furniture, extra mileage and gas to get to your job or drive your kids to school, laundry costs if your temporary home doesn't have washer dryer. You already had that mortgage obligation before, so that's why it doesn't count. Okay. Here in California, your insurer has to advance you 4 months of ALE benefits. And then they have to they have to offer you benefits for up to 36 months for being out of your home. Now, there's a caveat there. Tony, do you want to explain how this works, the up to 36 months with the ALE? It's not automatic that you get 36 months.
Yeah, I mean, it's initially you're guaranteed if your home is located in a declared disaster area, which is a formal declaration, then it's 24 months plus a 12-month extension for good cause, plus extensions for continuing issues that are for good cause and beyond your control. And so it could be more than 36 months if you, let's say there's legitimate delays in either supplies or contractors or that sort of thing, then in theory, you could go beyond that 36 months. It is a little tougher to get the insurance company to agree, or a lot tougher, depending on the insurance company, to go beyond those periods of times. But that's available to you down the road. So keep an eye on that and keep track of things that occur that are the insurance company's delay through this process, because that also assists because that was beyond your control. Like if they didn't get you your scope of loss and your other information to you to be able to give to a contractor for 6 months, and that's a delay, then that shouldn't be held against you. And those are things that we look at if you do file a complaint. And then maybe the last thing to mention here is, which is mentioned in the second to last bullet, is you may have a dollar limit. So although you may have 36 months of additional living expense by statute, by law, if you do have a dollar limit for your additional living expenses, you're going to need to budget yourself, because in some cases, let's say if you have an Airbnb and it's expensive, or you have other large expenses, it could run out at 20 months, 24 months, or whatever period of time. So even though you may have 36 months by law, your dollar amount may run out before then. So keep an eye on that budget, especially on the front end, where your cost may be a lot higher on the front end with hotels and other higher expenses.
That's a good point. So these are just some of those examples I was mentioning earlier, that of saying to your insurance company, okay, I have a place I want to live, but it's not paying rent per se. So it's, something like, I want you to give me the equivalent of what I could have rented my house out for, which is what the FAIR plan. Actually, why don't we hit on this for a minute, Tony? Because I know we have a lot of FAIR plan people in these fires. The FAIR plan's ALE is a little different, right? They are going to pay you the fair rental value as opposed to what it's actually going to cost you somewhere else, correct?
Yeah, versus turning in receipts for hotels and other expenses. It'll be, I had a 3-bedroom, 2-bathroom home, so many square foot, and what would it cost me to rent that same type of home? And if it's $3,000 a month, for example, and then that's what they would pay you per month. Now there is some aspect with I'd have to go back and see what their current policy is with regard to furnishings versus non-furnishings, but so that could come into play also.
Yeah, and we are going to do a webinar just talking about the FAIR plan, and we also do have some good materials on our website already about the FAIR plan. We did a program on it early some years back where we talk about the differences, but mostly there are similarities or just some formula differences. So Val, I'm going to talk now about
Question
debris
real quick.
removal. Sure, go ahead, Andrew.
So when I was at the LAC, there was people that were coming up and they had the California Fair Plan, and there was a big discrepancy by what they were getting as fair market value, and being told it was dictated by Zillow. If they have a dispute with that, can they challenge that?
You mean the fair rental value of the home they lost?
Yes.
Well, definitely they can challenge it. I mean, Zillow is just one resource, right? Getting a local realtor who's actually there in the community to give you an estimate in writing and what your place would have rented for before the loss is you don't have to accept the insurance company's valuations on anything. You just have to be able to provide a counter piece of proof that is just as strong. Is that, Tony, anything you want to add to that?
No, I agree with that.
Okay, so Val, let's talk a little bit about debris removal, which is a big topic right now in these areas that have just burned. Our basic advice: photo document or have somebody else photo document your lot before the debris gets removed. Understand your max available insurance benefits, learn your options, doing it on your own versus participating in a coordinated program, and consider holding debris removal insurance funds in account for later. So Val, do you want to sort of walk us through a little bit of what we know so far for Butte County, and or what you know from other areas and previous debris removal situations?
Yeah, so with Butte County specifically and the other communities you're just going to be looking at your county's jurisdiction to tell you what they will be able to offer, if anything. So Butte County is they've gotten approval from the governor's office to do a private property debris removal program. And so that's a coordinated debris program that will allow you to they will be able to take the insurance proceeds you have strictly for debris removal, but if it goes over that cost is going to be absorbed by government. Okay, so that's the beautiful thing about a coordinated debris removal program. It does take a while for those things to happen. There will be a right of entry that you are required to provide. They're going to ask you for documentation about your insurance proceeds. So that max available insurance, that's the information they're wanting to know. Depending on your policy language, it may be a separate coverage identified, for debris removal. In others, the language might say that it is 5% or so, whatever the percentage is part of your dwelling, your contents, and so on and so forth. And so that's how they'll determine that amount you have. And as Amy has in the guidance here, it's really important to hold those funds, because when the debris removal program has ended, they're going to send you a bill to pay, and we don't want you to be surprised. Now, having said that, the reality for what we've seen across the state over numerous years since my fire in 2007 is if you incurred debris removal costs on your own for something that wasn't covered by that program, having your receipts to be able to document that has been sufficient for most programs. But if you have a question, take it to your jurisdiction before embarking on that, because you don't want to be taking funds you think you have available that they are expecting you to pay.
And, very helpful. And so I think a lot of people, so Tony, I think, was one of the first people to really help put together a coordinated debris removal program many years ago. And, the good thing about, well, there's a lot of good things about coordinated debris removal. You have quality control with making sure that the debris is removed safely and put where it should be, not dumped over the side of a, canyon. But also because a lot of areas, rural counties do not really have money laying around, to pay for unexpected expenses like this. So it's very important that that piece of your insurance, contribute to the cleanup. And the thing that you got to know, how much we understand how much you need every dollar of your insurance coverage. So it's hard for us to even tell you to hold some of those funds, and not use them to replace your essential goods and stuff. All we can tell you though is that debris removal is part of your loss, and so to the extent that you can protect yourself from getting a big bill down the road, that's why we give you this guidance. Tony, is there
Right.
anything that you think we left out of this? And sorry, Val, it sounded like you had something you want to
I
add.
just wanted to call out the reason is considered a duplication of benefits, and that's why government is, if insurance paid you, government's not going to pay for that amount. That's all I had to add.
Yeah, and just to back around a little bit this is mostly going to be paid for by FEMA and state funds, and all they want to do, all the county, for example, would do is try and get reimbursement for the dedicated debris removal cost. The benefit that we see, and we think it is a huge benefit, although, as Valerie mentioned, this consolidated program could take longer than hiring somebody. But if you hire somebody, let's say it costs $100,000 to remove your debris, that $100,000 comes right out of your coverage amounts. So if you have a $300,000 policy for your structure, a limit, and it's $100,000, before you even started building, that $100,000 for that debris removal comes right out of that. And so it's deducted from that, and your insurance company now only owes you $200,000 from that particular bucket. For example, with the consolidated program, the agreement that we reached with all the different parties is that they're only going to go after those. Let's say you have a 5% of your coverage A, which is your structure for debris removal. The most they'll take is that 5%. The 5% for your structure, the 5% for your other structure, and the 5% for your contents coverage, versus taking it off of first dollar off of those primary buckets. And so in the end, we're finding that people are less likely to be underinsured. They may still end up being underinsured, but it's not going to be as drastic as it as we've seen it where people have gone private and had that first dollar taken out of it, out of their buckets of funds.
Yeah, I do want to note that at this time, the none of the fires from this summer have gotten a federal declaration yet. There's still some hope that that FEMA will be bringing their resources in. We're not quite there yet, so for now, we're looking at the state supporting the coordinator debris, but we'll see, I don't want to say never, right? We're not quite there yet. But the main thing is to hold those some of those funds so that you don't get in that position of having to pay funds back. Okay. Extended coverages, we talked about that. You may have that. Let's talk briefly about the flow of insurance funds. I want to stay at the very beginning that we see lots of different scenarios. We see some people get cashed out early, particularly if they're underinsured. The insurer will just say, okay, we're going to give you your max, and knowing that it's not nearly enough, but that at least they're going to get you that money, right? But that is not their obligation. Their obligation is to stick to the contract, but also act in good faith. So we do have some rules that should really help you. Hopefully, you've already gotten some advance funds from your insurer. We do in California require the insurer to pay an advance of 30% of your dwelling limits towards your contents. It's a little confusing. In Colorado, it's a little more straightforward. They require you to pay, the insurer in Colorado has to give you 65% of your contents. California was the way that they design this, it's a little more confusing, but it's designed to get you more money because your dwelling limits are typically going to be a much higher number. So 30% of your dwelling limits is going to, for a lot of people, is going to be more than 65% of your contents. And the whole idea of this law is to try to get that money into your hands as soon as possible while you struggle with your inventory. Or in the case of Colorado, some people may say, you know what, 65% of my contents is fine. I can live with that. I don't want to go through the pain of itemizing my inventory. On that point, I want to say UP offers some great resources for helping you do the itemized inventory. That is often the only way that you're going to get every dime of your contents coverage. So we don't pass judgment. If you decide you want to leave some money on the table because you just need to keep moving forward and you just cannot stand the emotional pain of forcing yourself to remember all the things that you lost and putting a dollar value on them, we pass no judgment. If you want to take the 65 in Colorado and be done with your contents, you know, that's your choice, and that's fine. Here in California, again, we really we do encourage people to try to work with their insurer to get reduced specificity. Maybe you don't have to, you know, name every single book title and every single item in your kitchen, and maybe they will let you bulk list. Now, Tony, I think we have, it's not just maybe, right? They're supposed to, in California, let you be bulk list items, right?
Yeah, we used to request it to the insurance companies to voluntarily do that, but then that was put into law, several years back to require insurance companies to allow you to bulk. You know, I had 30 CDs and not itemize like every single CD, et cetera, et cetera.
Right. So, but generally speaking, we were just talking about advances, but the normal flow of insurance funds in most policies is that you will get money towards the actual cash value of your losses, meaning what a willing buyer would have paid a willing seller for your couch the day before the fire. Then if you have replacement cost value coverage, which most people have, but if you have the base fair plan policy, you may not have that. You may just have ACV. Then if you have RCV, they then pay you the difference between what it actually costs to replace that item. So it's the fair market value first, and then the replacement value is normally how it goes, but not always. So, like I said, how your insurer will value your dwelling and your personal property loss is going to be either one of two standards. It's going to be the RCV, replacement cost value, what it would cost you to replace it now, or it's going to be the ACV, the actual cash value. But this is a little bit backwards because they almost always they'll pay you ACV first and then RCV second. And this is just to illustrate to you what this means. So you have the replacement cost. If you subtract depreciation, deduction due to wear and tear, right? That brings you to the Craigslist price. And sometimes that's all you get, right? That would be the permanent holdback of the depreciation. But sometimes it's just a temporary holdback. And once you give them proof of the replacement value and that you actually replace those items, then they will pay you the difference. But we'll be getting into that down the road at future webinars. What are some of the common hotspots that people run into problems with in this situation? Communication delays, adversarial claim process. The adjuster feels like they're treating you like a criminal, and that's completely unacceptable. Misinformation on what they owe you. Lowball valuations of your dwelling replacement or your contents. Excessive depreciation. Using age only as opposed to condition, right? Condition is what they're supposed to use. Like maybe this couch, it might have been 5 years old, but maybe it was in your living room where people weren't allowed to eat and drink while they were watching TV, and so it's in better condition. So condition is more important than age. People not having enough insurance, a huge problem. And then maybe you don't like the people that your insurer is sending out, or you don't trust them, or you think that they're undervaluing things, or they are cutting corners, that kind of thing. Those are very common hotspots. Other common hotspots, permitting, zoning issues. Your locality is trying to figure out, maybe the plastic pipes melted and there's some problem with water and they don't, or there's problems with grading, or there's lots of reasons why there may be delays in you being able to get a building permit and be approved to actually break ground. There may be
You had
soil
septic,
stabilization.
things like that, wells, driveways, retaining walls, all of those things can feed into this.
Right. And then scams, hard sell solicitations, heartbreaking, Annie can tell stories about people coming into her area that said, oh, Annie, why don't you tell about some of the builders that came through and made promises that they couldn't deliver on?
Yeah, and we have a whole webinar on this how do you pick your builder? What are some signs that they're, they say, okay, well, how much is in your policy? I can build for that. There's definite ways to vet them. That's why I tell you, just take a deep breath and don't let your anxiety drive you. But do not sign anything until contract-wise, unless you have a contract attorney look it over and make sure that you're well represented and that you know what this is going to cost you, what the challenges could or could not be, and what you're giving up. That's very important. Also, if you could address, Amy, the adjusters asking for receipts, proof of what you had, because we had a lot of questions about that at the LAC.
So you are not required to provide receipts to establish what you had. However, if there's a dispute over whether or not you actually had it, or whether or what the value of it is, it can be very helpful to be able to find your credit card statements and be able to show them that you actually bought these items. But they are not required. You are not required to have receipts. Tony, do you anything you want to add on that? I'm going to say no. He doesn't. Val, anything you want to add? No. Okay. All right. So one more deep breath. Okay. Val's going to walk us through, she already hit a little bit on coordinated debris removal. But Val, talk to us a little bit about these other items on this slide and how they come into play when you are at the beginning of the recovery process.
Yes, so if you have a mortgage, please let your lender know that that you've had the loss. If you have a mortgage through a Fannie Mae or Freddie Mac backed bank, there is a program they offer called Here to Help, and we'll put it in the chat for everyone to access. But they will basically provide you a HUD counselor to work with you on disaster related mortgage and mortgage adjacent issues for 18 months so that you don't have to navigate it yourself, because one of the options you typically will have available is a forbearance, depending on who your provider is. If it's one of those, one of them under Fannie and Freddie, there's more options there. So please take advantage of that, because especially if you find yourself underinsured, it might provide some space for capturing some dollars in the here and now that can be offset with a deferral on your loan and making it a longer loan. The other thing is, please look in your community for disaster case managers. A lot of groups right now are saying they're being case managers, they're doing casework, might be Red Cross, it might be your county. The programs that stand up with case managers that are here for a year to 2 years, they're going to help you walk through that long-term recovery process and access resources that you would not necessarily know about. So if you see an opportunity to sign up with a disaster case manager through one of the programs in the area, it could be Salvation Army, St. Vincent de Paul, Catholic Charities, other groups, please take advantage of that. Those, unfortunately, if you're in Larimer County in Colorado or in Butte County, your case managers have a lot of experience in this space, and so they'll be able to help you with this process and also take advantage of some of those charitable aid grant opportunities that'll come back. If Red Cross is at the LAC when you arrive, please sign up. They collect their donations. They'll vet your loss. And then if they have, depending on the funding they've got, they'll typically do disbursements to get you a gift card and potentially more dollars going forward. So, and by gift card, I mean a Visa card. Sorry, let me be clear. United Way in your community might be offering a similar program. Sometimes it's your service clubs, realtors. Just look for those opportunities where groups have raised funds to help you, because every penny is going to help. And then one of the things to look at, depending on where you are in the process, looking at bank loans, talk to your lender and see what types of products they have that can help you, because especially in California, a lot of our lenders have had much experience with helping their communities recover. And so they'll offer products that are made for you as a disaster survivor to help with gap funding when you're moving into repairs, construction loans, things like that. So speak to both your lender and your bank to see what opportunities they have to help you through this process. Depend on those people who do this all day, every day to help.
Thank you. While we still have the
real
word mortgage, I'm sorry.
Could I add to this real quick?
Of course.
If you still have a mortgage on your property, you may not qualify for a new mortgage. You may be retired. You also may not get that same interest rate. And if that's a concern, and that could be a stopgate to you actually moving forward, please call your mortgage company and ask them if they can open an escrow account to secure that. They would take money from instead of paying off your mortgage. In many cases, they will open an escrow account of equal dollar value to keep that mortgage open. Having a 2 or 3% interest rate on a mortgage is not what you're going to get today. And that may make it really difficult for you to recover.
And a good point, Annie. And then the other thing, just talking, even if your mortgage is low, it's, be aware that you might not qualify depending on your circumstances. You may be retired, your income may have dropped due to the disaster. And so don't think that paying off your mortgage to free up your insurance proceeds is the best plan, because sometimes, as Annie was saying, your bank might work with you to access some of that equity. But that, again, taking advantage of those resources through Fannie Mae with the Here to Help program.
So as long as we've got the word mortgage on the screen and we're talking about it, I want to make sure we touch on another kind of, it's not a small matter, but it is a reality, that if you do have a lender, and they're named on the policy, that the checks that your insurance company sends you for your dwelling and your other structures, just your dwelling and your other structures, not your contents, not your ALE, those checks towards your dwelling replacement and the replacement of your other structures and outbuildings are going to have your name and the lender's name. So they're going to be made payable jointly to you and the lender. And you're going to have to get somebody at the lender's offices to release their interest in those funds, or they may put those funds into an escrow account and dole them out. This is a whole nother topic. We're not going to go deep into it tonight. But again, we offer some guidance on our website on let go lender, how to get your lender to release your insurance funds, and also making sure that if the insurance company sends you a check with your lender's name that's actually for your contents, you got to get them to reissue that check with just your name. Now, it can be very hard to find in this day and age a person at the lender, let alone figure out where your loan is now. Sometimes your loan has been sold, and it just takes patience, and that is something that the Department of Insurance should be able to help you with. And also, we have some suggestions on getting your lender to pay interest on insurance funds that they hold in escrow. Anything either of you want to add on that, Annie or Val?
I'd like to add that we had numerous people whose mortgage was sold. Their loan was sold in the process of the rebuild. And I think that making sure that your mortgage company knows that you're going through a rebuild process, and letting them know that if they can put a note in your file that if it was to be sold, that would kind of highlight that, so that moving forward, you don't have to start from scratch. They document things, you're documenting, they're letting you know that we're going to sell your mortgage. Some people actually got that to go through where they would document that, they would send them a letter, and they could jump on top of that instead of having to scramble with a check going to the old mortgage company and then trying to get that reproduced, that kind of thing. So it's a good conversation to have with your lender.
Yeah. Okay. I don't know if Tony, we might have lost Tony. So I know he was double booked, so he was going to try to be with us. Tony, you still there?
Amy, can you hear me?
I sure can.
Okay, I'm sorry, my audio went out.
Oh, goodness. Well, we can hear you. Can you see the screen? Do you want to go through your slides?
Yeah. 1 second.
And while he's getting his tech figured out, I want to mention that we offer samples of letters that you can customize. So we have a whole section on the website of sample letters, and one of them is a letter you can use to get your lender to release insurance funds, among lots of other topics.
Okay, so I'm hearing a double feedback. Are you hearing anything?
We are hearing that, yeah.
Oh,
Do you have headphones?
give me a minute to see if I can fix it.
I mean, I can go through your slides for you if you want.
You can start. Why don't you go ahead?
Okay. So I've already introduced Tony. He's the Deputy Commissioner in charge of Consumer Services. So when you call the department's 800 toll-free number, 927-HELP, you're going to get somebody that is under Tony's supervision and has been trained, under him. And Tony has really been a side-by-side partner with us. The Department of Insurance works closely with Cal OES. They have people at the local assistance centers. They have a bat phone to insurance companies. Insurance companies have to respond to them. Um, they they have this residential policy locator tool. So if you're having trouble tracking down a complete current copy of your policy, that's something they can help you with. Um, and they also have a mediation program. Tony, you want to try talking?
Yeah, give me one more second. I think I may have it fixed.
And while he's figuring this out, I'll add one more little piece of information. So the department, their hotline staff can help you with a lot of things, like getting your policy and clarifying what benefits you have, and helping you with the math. They cannot be your free lawyer. They cannot be your free public adjuster. So it is good to keep your expectations realistic with what kind of help they can provide you. They cannot adjudicate a dispute between you and an insurance company, meaning they don't have the power to be the judge. Now, they can certainly put pressure on an insurance company to pay you fairly, and that's what they do all day long. But if an insurance company wants to really throw down and say, we just don't think this is covered, or this is as much as we're willing to pay, there is a limit to what the department can do. And that's where it's very important to turn to professional help. If there's enough money at stake to really go after it, that the department, that's not their job to be your individual advocate.
Can you hear me now?
Yes, we can.
All right. Can you still hear me?
Yep.
Okay, good. So I think I'm fixed. Okay. So where did you leave off?
I was just I didn't say anything about your mediation programs. I was talking about the limits of your team's ability to order insurance companies to do things that they do not want to do.
Right. Okay. So I'll just go through these slides and then kind of see where it goes, and feel free to jump in if you have any questions or want to add something. But essentially what we do is number one, we monitor these events. We work with Cal OES and FEMA or whoever else is involved, and the various counties and other agencies that are involved, and the debris removal program we're heavily involved in. We staff all the local assistance centers and the disaster recovery centers. We work with the insurance company catastrophe teams to ensure that they're out there in advance and doing what they're supposed to do. And then obviously after that period of time, we provide as much assistance as we can, whether it's answering questions, going over your policy like we talked about earlier, providing you with other resources, and ensuring that the insurance company is not delaying your claim, as well as paying you your full benefits under your policy, and ensuring that they're following all the various laws that Amy and others went over earlier, as well as some others that exist. So if you do file a complaint with us, one of the things that we do, especially with these large wildfire events, is we'll keep your case for the duration if necessary. So for example, let's say you have a complaint on initially your adjuster's not coming out there from the beginning of the claim. Let's say we resolve that issue. We'll still keep your file. And so let's say 2 months later, you have another problem with your inventory or something. You can come back to us and you won't be reinventing the wheel. Typically the same compliance officer that staffed with us will be the same person dealing with this And so you won't have to reinvent the wheel. They'll know who you're insured with. They'll have your other information you've already provided, and they can start from there and try and resolve that particular issue. And likewise, if something else occurs further down the road, we can then look at that issue also. So that's one of the good things about buying a case with us, and we'll again keep it for the duration of as long as you need it. And you could skip a slide.
Okay.
And here's another thing that we do, and we've already been out there with our enforcement branch, which are law enforcement officers, and they partner with the local district attorneys and the contractor state license board to ensure that there's not unlicensed contractors out there or scam artists out there that are trying to take advantage of you, especially at these beginning stages where someone says, hey, I can get rid of your debris for $1,000 and you pay them cash and you never see them again, that sort of thing. So we've been out there, we visited about 400 properties in the area. I think it was the Park Fire and for this particular data, saw about 100 homes and several residents, and provided resources and brochures that talk about tips of how to not make sure you're not getting scammed and who to contact, whether it's a local law enforcement, us as insurance, if there's public adjuster, for example, that's not licensed or that sort of thing, or if there's contractors involved, the contractor state license board.
Hey, Tony, if somebody has signed a contract with a public adjuster within that 7 days when they were not supposed to be solicited, does that make it easier for them to get out of that contract?
Yeah, it generally does. I mean, we would need to look at the particulars of what is solicitation and what exactly occurred here.
Mhm. Right, because you can
go ahead.
if you initiated, if you, the homeowner, reached out to the public adjuster, that's legal, right? You can hire a public adjuster within the 7 days. They're just not supposed to solicit you, right?
Correct.
Okay, just want to make sure we're clear about that. All right. Okay, next slide.
And then our complaint process, I talked a little bit about it. There's our 800 number. The easiest way to contact us with a complaint or just to even ask a question is to go online. You could chat with us and we can answer general questions like, here's the law with regard to that, or here's some resources for you. But if you have specific information with regard to your particular policy or something going on with how you're being treated, then file a request for assistance on that online, and that'll go directly to us to be assigned to one of our dedicated officers that are involved and are trained on wildfire and homeowners cases, so that they're familiar with all the laws and they could direct you and resolve those kinds of issues. And so that's really your best bet if you have very specific issues and specific things that are happening that you're not happy with.
Okay. All right. Well, thank you so much, Tony. Annie, tell us about Survivor to Survivor.
Survivor to Survivor is a forum where we get together once a month on Zoom and we share all of our resources with each other. The only people allowed in the room are survivors, and it may be what's triggering you. It may be not being able to sleep. It may be that you need help with a part of your claim and somebody else has had the same insurance company and they can help you with that. So, we just best practices, insights, supporting each other, lifting each other up, and no place else will you have the same kind of empathy as with other survivors. They understand what you're going through. We all get it, and it's a room that is very comfortable to be in for survivors. So I invite you all to come, sign up for it, and would welcome you with open arms.
And really, we want to encourage you, if you have friends and neighbors that are not, you don't see them logged on here tonight. Obviously, there's lots of people who were impacted that are not with us tonight, but we really want to get this information to them and get that opportunity out there to people that they can participate in this safe space, from the comfort of wherever you're living. And Annie is just one of the former survivors that, or former, one of the survivors um, who participates. We have lots of other folks involved, but it's really Annie is the most consistent person in the room there, and I'm very grateful to you for that, Annie. So,
And know that this is very impactful. It's very stressful, very traumatic. And I can't express enough to you that um, it has physical and mental impacts. So the sooner that you're talking about it, the easier it gets, and the closer you get to having a little bit of relief, little itty bitty bites of relief. And I would really impress upon all of you to go to the doctor, get your blood pressure checked, tell your doctor what's going on with you. So you can be tracked, because this is tough stuff, and it takes a toll on your body.
I want to thank you all for your time. I want to promise you we did not take questions tonight. I'm sure you have questions, but we have info@uphelp.org available to you. We have our Ask an Expert forum, which you can use to get answers. But most importantly, because we've been doing this as long as we have curated a series of informational webinars that we can offer you like this, and including a Q&A. So some of the topics, though, that you can educate yourself on our website anytime on everything that we talked about tonight, including what are my options if I think I might want to sell my lot, or if I want to just take my time to really figure all this out, which is of course what we encourage you to do. You'll find lots of guidance on our website. And you know, we do tell people often, the longer your claim stays open, the more you end up collecting. And it's hard because I think most people would love to put all this behind them as quickly as they can and just be done with the insurance process. But again, there's dollars in the fine print, and we just want to make sure that you maximize your recovery, and get what you paid for, because you know, government aid is great, charitable aid is great, but there really is no substitute for the dollars that an insurance policy should generate for you, even though it's not always easy to get all those dollars. But that's why we're here. So I want to thank Annie and Val and Amy and Tony for being on the panel tonight. I want to thank all of you for your attention and your time, and know that we are rooting for you on your road to recovery. And we really, you know, people say we're here to help. I mean, that's the only reason we're here. We're not here to sell you anything, talk you into anything. We're really here to give you the best guidance that we have distilled over 3 decades of doing this kind of work. Thank you so much for your attention and time. Good evening.